Hey everyone, welcome back. You know, we all wish we had a crystal ball to predict the market right.
That would be nice.
Well, today, on this deep dive, we're going to kind of do the next best thing. We're going back in time.
Back in time.
In January 2nd, 2024.
Okay.
When the Smart Investor podcast channel on YouTube dropped their predictions for the year ahead. So we're looking back at it now in January 2025, and we get to use hindsight to see how those 2025 predictions actually panned out.
Yeah.
What did they get right? What did they miss? And most importantly, what can you learn from it all?
It's fascinating to revisit predictions when we know what happened.
Right. So like a real-life test of their market forecasting skills.
Exactly.
Okay, so rewind to early 2024. What was the overall market sentiment back then?
Well, the expert in the video was calling for a bull market in 2024.
Okay.
They were predicting a soft economic landing in the U.S., and they thought the Federal Reserve would start cutting interest rates.
You were expecting rate cuts. Interesting.
Yep. And you know what? They were spot on. The S&P jumped 23% that year.
Wow. 23%.
Yeah.
That's not exactly an average year in the market.
Not at all. And what's even more interesting is they specifically called out the Magnificent Seven tech stocks to outperform Google, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. And those picks did very well, averaging a 60% increase.
Okay, so before we even get into 2025, I want to know why they thought the Magnificent Seven would do so well. Was it hype? Or solid reasoning?
No, they made a pretty good argument.
Oh.
They pointed to those companies' big revenue streams, their profitability, and their, really dominant market positions.
Oh.
These aren't just trendy startups,
Yeah.
These are like established companies with proven track records and a lot of future growth potential.
That makes sense. So not chasing hype, just fundamentals.
Right.
Did they mention any potential roadblocks, though? Any warning signs?
They did acknowledge some potential risks. One of their concerns was if inflation stayed high, it could throw a wrench in the Fed's plan to cut rates. So that soft landing that they were predicting wasn't a sure thing.
Right.
And that would impact interest rates too.
Exactly. Higher rates make it more expensive for companies to borrow money.
Oh, yeah.
That slows down growth, and that can impact the whole market.
Not just a few sectors.
Yeah.
Okay, so even with their bull case, they were thinking things could go sideways. Did they mention any specific concerns about certain companies, even within the Magnificent Seven?
Interestingly enough, they did single out a couple companies that they thought were maybe a little overvalued. Palantir and Tesla. Now, they weren't saying these companies were bad investments.
Right.
But they were cautious about their really high forward price-to-earnings ratios.
Okay.
Especially compared to some of the other tech giants.
So they were trying to find that balance between optimism and caution.
Right.
Okay. So they were calling for a bull market in 2024, which was right. And they were especially bullish on those Magnificent Seven stocks. But with some caveats.
Particularly about inflation and overvaluation.
Right. It wasn't blind optimism.
Right.
They were looking at data and making predictions based on that.
Now I'm really curious to know how their 2025 predictions actually turned out. Did the bull market continue? Did the Magnificent Seven keep soaring? And did those worries about inflation and overvaluation come true?
Well, that's where things get really interesting.
Okay, let's hear it.
Let's jump into what actually happened in 2025.
All right, let's unpack 2025.
So remember how the expert in that YouTube video predicted a bull market for 2025?
Yeah, driven by falling inflation and interest rate cuts, right?
Right. They were pretty optimistic.
Yeah.
Well, 2025 didn't quite go as smoothly as they thought it would.
Oh.
The market didn't totally tank or anything.
Okay.
But it definitely hit some bumps in the road.
So not exactly that raging bull market we saw in 2024.
No.
What happened? Did those concerns about sticky inflation come back to bite them?
Yep. Inflation was a lot stickier than they expected. It did come down, but much slower. And that meant the Fed had to hold interest rates higher for longer than they planned.
Oh, so no rate cuts to fuel the market.
Right.
How did that affect things overall?
The S&P 500 still went up in 2025.
Okay.
But the gains were a lot smaller than that 23% surge in 2024.
Makes sense.
It was more of a slow climb, with some ups and downs along the way.
Okay, and what about the Magnificent Seven? Did they keep outperforming like the expert predicted?
Their performance was kind of mixed in 2025.
Oh.
Some did well, but their returns as a group were a lot lower than that 60% they got in 2024.
So even the Magnificent Seven felt it. What about those companies they flagged as potentially overvalued? Palantir and Tesla, were they right to be concerned?
Their concerns were at least kind of justified. Both companies had some challenges.
Right.
Their stock prices didn't crash, but they didn't see that same explosive growth they had before either.
So it sounds like the expert had a pretty good grasp of the bigger picture.
Yeah.
Predicting that 2024 bull market. And they called out those key things that could speed up or hinder growth.
They did. And they even pointed out some red flags with certain companies, even within their magnificent 7 picks.
Yeah.
But, perfectly predicting the market is almost impossible.
Yeah, there are just too many variables.
Yeah.
It's a good reminder that even when experts get things right, there are always going to be surprises.
Absolutely. And it's super important to remember that market predictions, even the ones based on really good analysis, are still just educated guesses.
Right. They're not guarantees. Speaking of educated guesses, they mentioned a couple of market indicators they were looking at back in 2024. Fine R margin debt and the Shiller PE ratio.
Oh, yeah.
Can you remind us what those are and how they were using them?
Sure. So Fine R margin debt tracks how much money investors are borrowing to buy stocks.
Okay.
So when that number's high,
Yeah.
it usually means investors are feeling really bullish
Uh-huh.
and are taking on more risk, which can be a sign of too much optimism,
Okay.
which sometimes happens right before market correction.
So, bit of a canary in a coal mine?
Yeah.
Potential warning sign?
Right. And then the Shiller PE ratio,
Yeah.
also called the SAPE ratio,
Uh-huh.
that's a way to look at stock valuations over a longer period.
Okay.
Taking into account, inflation-adjusted earnings over the past 10 years,
Okay.
that helps smooth out those short-term ups and downs
Yeah.
and gives you a sense of whether stocks are overvalued or undervalued from a historical perspective.
So they were using both back in 2024 to sort of take the market's temperature. What were those indicators saying at the time?
Well, both margin debt and the Shiller PE ratio were pretty high by historical standards, which could have been a warning sign, like maybe the market was getting a little too hot.
So even though they were predicting a bull market, they were seeing some warning signs too,
Exactly.
trying to find that balance
Right.
between optimism and caution. It's like trying to read tea leaves.
Yeah,
You can see some clear patterns, but there's always that uncertainty.
for sure.
And with the market, there are always surprises
Yep.
waiting for us.
Always. Which is why it's so important to not blindly follow predictions.
Even from experts.
Right. You got to understand the reasoning behind them
Yeah.
and always be thinking about those risks.
Those uncertainties.
Yeah.
Okay, so we've looked at their predictions for 2024 and 2025.
We have.
What are the big takeaways? What can we learn from looking back at these predictions and seeing what happened? So we've talked about the predictions and seeing how things turned out. What are the big takeaways here? What can we learn from all of this?
Well, I think one of the biggest lessons is just how important humility is when it comes to predicting the market.
Right.
Even if you analyze everything and understand all the different factors, it's still really hard to get it right.
Like, it's a reminder that we're all playing a probabilities game, not a certainty game.
Exactly. And I think another takeaway is that you always got to be aware of those potential risks,
Oh, yeah?
even when things seem like they're going great. The expert in the video did highlight some of those risks,
Right.
especially with inflation and the potential for overvaluation.
It's like that old saying, be fearful when others are greedy and greedy when others are fearful.
That's it, exactly. It's so easy to get caught up in the excitement of a bull market
Right.
and start thinking that the good times will last forever.
And that's when those behavioral biases can really mess us up.
Totally. We start making decisions based on emotion
Yeah.
instead of sticking to our plan and, doing our research.
So how can we avoid falling into that trap?
I think it's really important to have an investment strategy
Okay.
and to stick to it no matter what the market's doing.
Right.
You need to know your risk tolerance,
Yeah.
set clear goals,
Wow.
diversify your portfolio.
And tune out some of the noise too,
Yeah.
especially on social media.
Oh, yeah. All that hype can get to you.
It's easy to get swept up in it.
For sure. It's important to remember everyone's situation is different.
Yeah.
And what works for one person might not work for you.
Right. And don't let FOMO lead you to making bad decisions.
So as we wrap up here,
Yeah.
what's the one thing you want our listeners to remember? What should they keep in mind as they navigate the market?
I think the most important thing is to have a good balance of optimism and skepticism.
Okay.
Be open to possibilities, but don't be naive.
Right.
Do your research, understand the risks, and never stop learning.
Great advice. It's
Yeah.
about being informed and engaged, not just following the crowd.
Exactly. And remember, investing is a marathon, not a sprint.
Yeah.
It's about making smart decisions for the long term
Right.
and not getting caught up in the day-to-day swings of the market.
Perfect. Well, thanks for joining us for this deep dive.
Of course.
We hope you've learned something that'll help you on your investing journey.
Absolutely. And to all our listeners out there,
Yeah.
stay curious, stay informed,
Yeah.
and happy investing.
See you next time.